Debbie Marcoux is licensed by the Department of Financial Institutions, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and I am here all by myself this week. I'm doing this show by myself. Poor Heidi is just absolutely buried, working on all of your paperwork and getting everything done for you guys. So you've got just me, the one and only Debbie Marcoux. So I am the Mortgage Mom. This is Mortgage Mom Radio. And what do? We bring you all of the education, information, and that you need to navigate the home buying and mortgage process. So whether you're buying a brand new home, you're refinancing your property, whatever it is that you might be doing, that's why we're here. We're trying to get you educated, make sure that you're making the right steps forward, one foot in front of the other, and you get to the end goal of completing that financing. Without that loan, the majority of people don't have the cash to just go buy a brand new property. So without that cash, you need a loan. And without that loan, you can't buy a house, or you can't refinance or get the cash that you need. So what we're doing is trying to make sure that we get you everything that you need, get you put in the right place, and make that plan for you. So today I'm going to actually, since I'm doing this all alone and I can't really talk to myself for an hour, I'm going to do a workshop for you guys, and it's going to be a home buyer workshop. It's going to be what number are we at, Mikey? We're 16 today, I think.
I think today's actually 16.
Yeah. So we're going to be at 16 today, and this one's going to be all about credit. So a piece that I don't usually do in my workshop series, and I decided to throw this in at the last minute. So we're going to go through all of the credit information. I think it's really important for you to know what's on your credit report, what changes your credit score, what can and cannot be fixed by a credit repair company. So if you are interested in making sure that you keep your credit score at the very tip top that it could possibly be, or possibly trying to get yourself back into a good place by rebuilding, this is definitely the episode for you. So how do you guys join the show and know when we go live? You text the word mom to 844-935-3634. That is going to opt you in to getting one text message per week, and we're going to send you that text message with a link to watch us live. Sometimes it takes us a minute or two. We might be a little bit delayed. So if you click on that link and we aren't there the minute that that you clicked on it, don't worry, we're coming. So just be prepared, maybe wait a couple of minutes and try that link again. But if you want to know when we go live and you want to watch me do it live, you want to be able to ask me your questions right through the feed, right through YouTube, or you want to be able to call into the office to get through the studio, you can get right through to me and we can hear your voice live on air, then you need to know when I go live. So what do? You text the word mom to 844-935-3634. If you guys have any questions right now watching that you want to know about, please feel free to put those into the feed. I cannot actually see the feed today. I can't see the chat box because I am going to be looking at the PowerPoint presentation that I created for you guys. Mikey will actually be stopping me and letting me know that people are saying hi or if there's questions that come through. So please just be a little bit patient because he's got to stop me and then read those out loud. So Mikey, right now I'm going to ask you, do we have anything going on?
So Heidi says that she's still here in spirit, that she's sorry she couldn't make it for the show.
I know. I love you and thank you for all that you do, Heidi.
Tom Aaron Boschage says, hi, guys.
Hey, Dad. You know, you can call him Grandpa Mikey. It's okay.
Okay, well, Jennifer Sane says, hi, all.
Hi, Jen.
And Heather says hi.
Hi, Heather. Thanks so much for watching. So, again, if you guys have any questions whatsoever, anybody else out there, if you didn't let me know that you're watching, please tell me. Make sure you put something into the feed. Again, if you guys want to know when we go live so that you can interact, you can ask your questions, or you can call in during that show and then hear your voice on air, give us a call. You're going to text the word mom or call us, all the same phone number. So text the word mom or call 844-935-3634. That's We lend for you. That's LEND and the number 4. So Mikey, you also have to watch for me since I can't see it with the PowerPoint up. You've got to watch the timing for me because we do have to do commercials. We got to get about 4 in, and we've got to be done by 57 minutes. So keep an eye on that for me. I do want to go ahead and get into this PowerPoint. I think credit is really important. It's something that you guys do need to know about. And I'm going to do that right after we take a very quick break. So we're going to do that, and we'll be right back.
We're back.
All right. Well, thank you again for watching really quick. I appreciate it, guys. And here we go. Let's get into this workshop. It's number 16. It's one that I have never done before. I thought this was a really great one to throw at you guys because no matter who you are, whether you've already bought a home, whether you're thinking about buying a home, whether you want to buy a second home, start becoming an investor, purchasing some rentals, maybe you're just trying to get a car loan, maybe you're a young kid starting to build credit. This is a really great episode. It's to learn all about it. So again, workshop number 16, and this is going to be all about credit. So Mikey, go ahead and flip the page for me. So we're going to start off with how do you guys contact us? Because I think this is very important when you guys have questions other than following along on the show live. Obviously, we do mortgages. We can help you guys get started. We want you guys to get those phone consultations. So what do you do? So number 1 is you can text the word mom or you can call. Like I said, it's our 844 We Lend for You. That's LEND and the number 4. So we, WELEND and the number 4. That is how you guys get a hold of us. Text the word mom or give us a call. You guys can always check us out on Facebook. So not only do we stream to YouTube, but we're streaming to Facebook as well. So if that just happens to be your favorite social platform, feel free to watch us there. Go to the page, follow us, like it, on the Facebook channel. You guys can send me a message right through Facebook, whichever you'd like. Then we also have Google and Yelp. So we would love for you guys to read the reviews. And if you watch the show and we're giving you great advice and you do appreciate it, we would love for you guys to give us a review. We're bringing you this content absolutely for free. And we are trying to make sure that you have all of the education that you could possibly have in order to make your transaction a little bit smoother. So we would love it if you guys would either go to Google or Yelp and give us a review, spread the word. It truly does help us. If you're watching us on YouTube, please subscribe to the channel and give us a thumbs up. That is going to help the algorithm and it's going to help everybody that doesn't know about us possibly get our show out to them when they are searching words like mortgage. So please, if you could do that, that'd be great. So you can go to mortgagemomradio.com. That's the best place to start. You guys can book a consultation right through the website. You can check out all of the free tools and calculators and things of that nature that we have there for you. And you can contact us by sending me a message. So you can actually hit the contact us button and send us an email right through the website. So that's mortgagemomradio.com. All right, so on to the next, Mikey. We're rolling. All right, so if you are a phonee, and that is not with a Y, that is with an IE like I am, and you are over the computer by the time you get home at the end of the day, and you want to make sure that you can get a hold of us, use all of those great tools that I just mentioned on the website, you can do that through our phone app. So get the phone app on your phone. It's going to give you everything you could possibly need. If you guys are watching us do this on Wednesday on YouTube, you can see my presentation. You can see all of the fantastic things that the phone app does do for you. So from contacting us, which lets you call, email, whatever you need, listening to the podcast, watching the workshop training videos, applying, you can do your application right through that phone app, right online through the phone app. You can request to be pre-qualified. So you're going to give us your contact information. We're going to reach out to you and start that pre-qualification with you. You can run the calculators like, Heidi's talked about numerous times in the past. So you can do tons of things with this phone app. And if you want to get the phone app, again, super simple. You're going to text the word mom to 844-935-3634. That's 844 We Lend for You. That's LEND and the number 4. So get the phone app. Best way to get in touch with us. You guys can call us, watch the YouTube, check out training videos, apply online, use the calculators. Super duper cool. We're going to get you there. How are we doing on on the chat box. We're okay right now, Mikey?
Yeah, we're doing pretty good.
All right, cool. Anybody's got any questions about anything that I have to say, please feel free to put those into the feed. I would love to answer them for you. It is the very best way to make this show awesome. That is, every single person that asks a question, it is something that another person is thinking. So ask away, please. All right, so here we go. Credit education. I think this is so important. So what does your credit consist of? So what is going to be on that credit report when I pull it? Okay. What are the, what's the pertinent information that we're going to see? So we're going to see your identification information. I'm going to see your name. I'm going to see your aliases. I'm going to see if you've gone by other names. So for example, my real legal name is Deborah, but I go by Debbie. So both names are going to show up on my credit report. I'm going to be able to see my maiden name, a good old Aaron Bossich, and we're going to be able to see my first married name and now my second married name. So yes, I went through divorce and got remarried. So all of those names are going to come up on my credit report. That identification information is there. My social security number, my birth date, my addresses. So where have I reported that I've lived over the last 7 years will show up. The ones that are the most important that a lender is looking for is the last 24 months. So we are on a loan application always asking for, show me the last 2 years of address history. So we're going to be looking at that very, very closely on your credit report when we do pull it. We want to see where you've lived. Keep in mind, this happens all the time and it's not a big deal. We're going to ask you for an explanation, but it's usually typically very easy to explain. So many, many times we'll pull a credit report and you'll see your brother's address or your sister's address or your parents' address will show up. Maybe you still have one piece of mail that's going to their address, or maybe you actually use their address for your mail because you've never changed it to your home address. It's just easier. Your parents have lived there forever. It's the family home you grew up in, and it was really silly for you to change your address along the way. So we are going to ask you to explain the last 24 months of address history that is showing up on the credit report. And it's just a simple letter of explanation that you'll give us. You're going to type up a quick letter. We might type it up for you and send it to you to DocuSign, just telling us what that address is. I owned that house. I sold it. That's my parents' home. It's my brother's house. I rented that apartment 4 years ago. Why it's still showing up today, I have no idea. Nothing that's going to make or break your loan application, but we are going to ask. So all of your identifying information is going to show up on your credit report. We are going to see it. So just keep that in mind. One thing that a lot of people don't realize is that if information is wrong, sometimes that can possibly bring your credit score down just a tad, even a point, 2 points, maybe more. So you do want to be doing credit monitoring. You do want to sign up with a credit monitoring service where you can watch your own credit report. You want to know, what addresses are reporting for me, what employers are reporting for me, how long does it say that I've lived there, how long does it say that I've worked there. So the credit report gathers all of that information when you do a loan application, whether that's with a mortgage lender or that's with a car application to buy a car or a credit card application to get a credit card. So that is all being gathered and it's all being reported to the credit bureaus, and they're collecting that information. So when you have multiple jobs changing frequently, or you've got addresses where you live that is changing frequently or reported incorrectly, that could possibly change your credit score because it doesn't look as stable. So you want to make sure that you are constantly watching your credit report, addresses that you haven't lived at that don't belong to you. Make sure that you are disputing those addresses with the bureaus. Write them a letter and let them know where you live, that you haven't lived there ever. I mean, I have an address on my credit report that I've never lived at ever in the history of my life. I don't even know where it came from, and I have disputed it over and over again. And for some reason, I cannot get them to remove it off of my credit report. So there must be another Debbie Marcoux somewhere who has lived at that address and it is coming up for one reason or another. But the best thing that you can do is to try. And sometimes you'll be successful and sometimes you won't. But the more that you know about your credit report, the better off that you're going to be. And the more accurate that it is, the better that you're going to see your score. So make sure that you are following it and you know what's on it and you're aware of what it's showing. So very, very important. Your identification information is important. If you are a junior or not a junior. You want to make sure that that is reporting correctly too. We've had problems where I've had clients who are juniors and we pull the credit report and I can't get a score because the credit report itself, the credit bureaus have your name with no junior and I'm pulling with junior. So then I have to pull without junior, but then we have a problem. Your driver's license and your birth certificate and all of your true identification is junior, and that won't match when we go to sign your loan documents with you. So you want to make sure that you are watching those things. Your name is spelled correctly. You've got a junior if that belongs there, a first, second, or a third, whatever it is in your name, your middle name is where it's supposed to be. Make sure that all identifying information is accurate. And if it is not, write a letter to those credit bureaus, send a copy of your birth certificate and your driver's license, and tell them to update your records so that it is accurate. That's very important, especially if you are a junior or not a junior, but there is a junior with the same name, because you guys might end up getting your credit reports mismatched. You might end up with dad's information on your credit and vice versa. So make sure that you guys are doing that. Very, very, very important. Again, Mikey, just stop me if anybody has a question. I want you guys to put it into the feed. If you want to talk to me, give me a call. It's 844-935-3634. That's 844 We Lend for You. That's LEND and the number 4. You want to know when we go live so you can be part of it. You can interact when we do these shows. You've got to text the word mom to that same number. It's 844 We Lend for You. That's WELEND and the number 4. So there you go. Make sure you guys text the word number to that 844. And that way you're going to know when we go live and you can actually interact with me and ask those questions. So back to credit, and then we're going to take a quick break and we're going to keep going. Trade line information. You want to make sure that you are watching your trade lines, okay? Every single trade line that you have is going to be reported to your credit bureau most of the time. And remember, there are 3 credit bureaus. There is Experian, there is TransUnion, and there is Equifax. Some credit cards are only going to send it out to 1, maybe 2, but not all 3. So your credit score can change from bureau to bureau. Your trade lines being reported can be different from bureau to bureau. So you want to make sure that you're constantly following. You've got some sort of way to monitor the credit report and you know what is being reported. It is very, very important. Every single time that you have a credit card brand new opened, or you pay off a car, or you take a new car loan, whatever it is that you're doing, you want to make sure that you're following along and that those trade lines are correct. I cannot tell you how many times I have seen somebody trade in a car, especially when it's a lease. Lease is up, they turn the car in, they get a new car loan shows up, lease gets stuck there. It never updates. It doesn't go negative. It doesn't show you that it's 30 days late or anything like that, but it never updates. It stays wide open. It says it's open. It shows that it has 1 or 2 payments remaining. It has a monthly payment that it is accounting for in your ratios, right? It's showing that your $500 car payment or whatever that number is still outstanding, a monthly debt that you pay. And when they are looking at your debt ratios, yes, the credit bureaus do that. When they are looking at your debt ratios and your income and how much do you owe and how much debt do you carry and what are the balances, they are looking at that as thinking that that is an open debt that you are obligated to. So you want to make sure, again, that you are watching those trade lines and that you are getting those taken care of if something is not updated or reporting correctly. That is very, very important. So let's take a quick break. How are we doing on time, Mikey? Where are we at?
We are at 20 minutes.
All right, awesome. So let's take a very quick break, and then we're going to get into public records, collection accounts, and fair credit reporting challenges. So we'll be right back.
And we are back, and we actually have 2 comments. We have from Debbie Kilhafner. She said, "What a great informative show." And we have another comment from Diane Sears. She says, "Hi, happy first day of fall somewhere."
Aw, well, thank you, Debbie. Thank you very much. I love that you watch us every week. You are one of our biggest fans. And so, Sears, what's her first name again?
Diane.
Diane. I always want to call her Debbie. I don't know why. But Diane, you're also one of our biggest fans. You're always watching. I know you're in escrow, so you're doing this for a living. You're at the grind just like we are. We so appreciate you very, very much. And thank you for tuning in. Really appreciate it. Any questions that any of you ladies have, please throw them into the feed. Like I said, this one's all about credit, your credit score, what's on your credit report, what determines the credit score that you get when a bank runs it. That's what we're talking about today. It does not matter if you guys own a house, have been thinking about doing a loan, you don't need a loan, but everybody needs credit and everybody needs the very best credit score that they can get. So this is a great show, very informative. Make sure that you guys are tuning in. And if you have questions, please ask them. It's so important because somebody else is thinking the same thing. So again, anybody else out there, if you guys have questions, please put it into the feed. I'd love to hear from you. You want to call into the show right now. We'll get you on live. I'm going to listen to you and I'm going to answer those questions. So it's 844 We Lend for You. That's WELEND and the number 4. That's 844-935-3634. Drew, I don't know if you're watching, but I think I finally came up with something that's going to stick in people's brains that they can't get rid of. WELEND and the number 4. We got to figure out how to make that a song for sure. Anyway, all right, so let's get back to credit. We don't have any more comments, Mikey, that I can't see before I get back at it?
Nope.
All right, cool. I did see from my phone really quick, it looks like Kathy got on when we sent out the text message. I sent the link and she clicked on it and we probably came on maybe a minute or two later and she said, looks like your feed's not working. So I do want to remind everybody that if you get that text message once a week and we're not there, just be patient, give it 2 or 3 minutes, try that link again. You should see us come on. Sometimes it just takes a minute for YouTube to connect the feed, even though we're there and we start. We're usually like a couple of minutes delayed from what you see to where I'm at in my recording. So please just try one more time. But if you guys want to know when we go live, you want to interact, you want to be part of the show, then you got to make sure that you text the word mom, subscribe to the channel, give us that notification bell, turn it on, give us the thumbs up. We really, really appreciate it. So here we go. Okay. So public information, this is stuff like charge-offs, collections, not tax liens. Those no longer are being put on the credit report, but public record information, bankruptcies, things of that nature are going to show up. If you have alimony, child support, and there's a judgment and they're putting it through the credit report, we're going to see that as well. So all of that information, your public records, your collection accounts, those are all going to show up on that credit report. The more of those that you have, the lower that your credit score is going to drop. As fresh as it is determines how much that it's affecting your credit score. So I think that that's really important for you guys to understand. So you could have a perfect credit score, 850. That is the highest credit score you could possibly have on a credit, on your credit report. Let's say that you have a collection show up, medical collection, you didn't even know it was a bill that existed, you never got it in the mail, it's for like $50, and all of a sudden it shows up on your credit report. You are probably, what I typically see, and I can't give you a number that is specific, every single credit report is different, every borrower is different, their trade lines, the amount of trade lines, the amount of open credit, the amount of open debt, everybody's credit report is different, okay? So this is just giving you kind of an average of what I see. I want to make sure that I make that very specific. I'm not quoting a number here, but I'm giving you what I typically see. So if you were to have a $50 collection report show up, it's brand spanking new, you had an 850 credit score previously, you will probably see your credit drop to very low 7s, high 6s. It will do a number on that credit report. Now, you pay that $50 off, you wait 6 months, you wait a year, you wait 2 years, it's going to gradually start to go back up. When that collection account has been paid off and it is 2 years old, you will probably see your credit score 830-ish, right? Which is why it's very difficult for anybody to truly get an 850 perfect credit score. It is so hard. And please, I have people that have a 760 credit report and they're upset. Oh my gosh, I can't believe I'm that low. I want you guys to all understand that 740 and above for the majority of the loan programs that we do are considered an amazing credit score. That is top tier, best interest rate pricing for a loan is 740 plus on the majority of our loan programs. Those exceptions are jumbo loans. Jumbos are a little bit different. They're not being backed by FHA or USDA or VA, right? Not government loans. They're not being backed by Fannie Mae or Freddie Mac, big giant entities, right? Conventionally. Jumbo loans are private money for the most part, and that doesn't mean they're not big entities. Wells Fargo's a big bank. Chase is a big bank. JP Morgan's a big bank. Goldman Sachs, big banks, right? They have a lot of money, but they're still small in comparison to the government, to USDA, VA, FHA, and even Fannie and Freddie. So they are going to give better rates to 780 plus than to 740 plus, okay? Those are the only loan programs that we see that. But the majority of loan programs, 740 plus is considered an excellent credit score. So if you have a 740 plus, you are not an 800 or an 850 or an 830. I do not want you to fret, be worried, or concerned. You are fantastic, okay? What I love is when husbands and wives have little fights between each other, who's got the better credit score, whose is higher. You guys should continue to always do that because it's going to continue to feed for both of you. The higher you both are, the better you both are. So just make sure you guys keep that little rumble going, right? Whatever that it is, or even if it's you and a girlfriend or you and a boyfriend, just keep that little tiff going to make sure you guys are always staying on top of it. Credit is so important for everything that you do, whether it is buying a home, buying a car, anything that you're going to finance, even student loans, personal loans, anything that you might be going out there and trying to get. The interest rate you're going to pay for the money you're going to borrow is going to be significantly less the better that your credit is, the longer that your history is. So guys, if you are a cash guy and you or girl, and I don't mean, when I say guys, I'm not talking boy or girl, I'm just using that word generally. If you are a cash person, you don't like to take loans, you don't like to finance things, you want to pay everything in cash. If you can't afford it, you don't buy it. I love your philosophy. I think it's fantastic, but you're really hurting yourself in the long run when something does come up that you might want to finance and you find out that you don't have a credit score or that your credit score is a super low score because you just have no history. So make sure that you're doing what you need to do to build that history, even if it's having credit cards that are open, using them every now and then paying them off at the end of the month, and just making sure that you're continuously building and lengthening and strengthening that credit report. Very, very important. We good on anything? We're good on comments?
We just did get a comment from Heather, and
Okay.
she said, what is the minimum credit score? What is the minimum credit score do you for an FHA loan, and what do you need for a conventional loan?
Okay, so great question. I'm happy that you asked that, Heather. And again, so many people listen to the show. I'm sure somebody else is thinking that question. So a minimum credit score for FHA, that was her first question, it's 580 is the actual number. So 580 is the minimum credit score for FHA. FHA can actually go lower than that. We just don't typically see that we can get a loan approval when we run it through the computer system. So although I've seen FHAs, if you actually look up the underwriting guidelines, will go to, I know for a fact, 550. It could be 540, but I'm about 99.9% sure it is 550. However, the majority of the time to get that approval when we run it through the computer system, we're looking at 580 and above. The other thing is that even though FHA says we'll go to 550, the lenders that are actually writing the loans that have to make sure that if they write the loan and fund it, that FHA is going to buy it, they are very sketchy. They're very worried and nervous when they do a loan under 580, because if there is anything wrong in that file and FHA doesn't buy it from them, they are going to have to actually carry that loan themselves on their books. So the amount of investors that are willing to buy the loan or give us interest rates on a loan with a credit score under 580 are slim to none. So I would say that 580 is a good number to push for if you're looking to do an FHA loan. VA, she didn't ask about VA, but I'm going to jump into that anyway since we're right there. VA is actually very similar to FHA in the fact that the 580 and above is going to be more investors willing to give us pricing for the scenario. But the VA actually does not have a minimum credit score requirement. So it is actually written that there is no minimum credit score, that they are going to truly look at the file and determine the answer. However, the investors that we can find that are willing to actually take the loan and sign off on it are slim to none. So with FHA or with VA, you also want to really try to get to that 580 if you can. The other thing, remember guys, is that even though we can go that low in interest rates, the lower that your credit score is, the higher that your interest rate is going to be. The points that you're going to pay to get the loan are going to be significantly more, and it's going to cost you quite a bit to get into the loan. So you just want to keep working as hard as you can on that credit to get that credit score up as high as possible. And conventional loan right now is a 620 credit score. So that is a hard stop right there. If you have two borrowers on a loan, one has a super high credit report or credit score, the other has a very low credit score under 620. As of today, you cannot get a conventional loan. Coming very soon, we're hearing that there are changes on the way. Fannie Mae is making a correction that the average of the two credit scores has to be at least 620 and above. So for those of you, maybe wife's at a 615 and husband's at a 700, the answer today is sorry, can't go conventional. We're going to have to go FHA or VA. But in the near future, when those changes come to play, we might have that possibility of conventional. So make sure that you stay tuned for all of the announcements that we make. We're trying to bring you guys as much up-to-date information as we possibly can. As the guidelines are changing and things are important for you to know, we're making sure that we're sharing it with you. And that is the very best reason that you guys should be following along, subscribing to the channel, texting the word mom to be part of the show once a week, calling in with your questions. Just follow us, guys. We're giving you all the information that we can and making sure that you are as up to date as possible with all of the lending requirements that are needed. So I hope that answered your question, Heather. If you've got another one for me, Mike is going to read it out loud and I'd be more than happy to answer it again. Mikey, we good right now, or anybody else ask any further questions?
No, I think that's all we have right now.
All right, perfect. So how do you guys make sure you're part of that show? What number is it that you text? You text the word mom to 844 We Lend for You. That's WELEND and the number 4. That's 844-935-3634. Same exact phone number. If you guys want to get that phone app on your phone, it's pretty amazing and you don't have to go to the website. You can book your appointment right through that phone app. If you want to go to the website, we would love that too. You guys can send us an email. You can book a phone appointment. Our phone appointments are free consultations, guys. We want to work with you, whether it's about credit, whether it's about income, no matter what the scenario is, we want to hear from you. And it's been a while since we've really talked scenarios. So next week, I really want to get into IRS liens. What if you've got them? Can we get them paid off? Can you get financing with them? Yes, you can. Just as a quick spoiler. So things that are important to you are important to us. If we don't know what your struggles are, we can't help you to make that guide, that roadmap, that plan to get you from point A to point B in the loan process. If you think that you cannot get a loan, maybe you can't, but we're going to help you create a plan to get you there. And maybe you can, and you're your worst enemy. You're telling yourself you can't do it when in reality you actually can. If you picked up the phone and you got on the books, or you went to the website, or you used the phone app and you schedule yourself an appointment. If you don't see an appointment that works for you, please send me an email. It's questions@mortgagemomradio.com. Debbie@mortgagemomradio.com. They're both coming to me. I'm the one answering them. Tell me what time you need. Tell me what day you need. And I'm going to do my very best to make sure that we get you booked and scheduled. It's really important to us that you're getting the information that you need. Saturdays and Sundays, we've always got somebody on call. So if you're listening to the show by radio, know that you guys can go to the website. You can use the phone app. You can book the appointment, and you are going to get a call same day. So if you want to book for Saturday, book for Saturday. You want to book for Sunday, book for Sunday. But you're going to get a call from us. And so don't feel like you have to wait till Monday. You don't, especially right now while you're listening to it. It's fresh. It's top of mind. This is the best time to make that appointment and get on the books and talk to somebody. Again, if you guys want to be part of the show, you guys are going to get a text message once a week if you opt in by texting mom to 844 We Lend for You. And we want you guys to call in. I'd love to hear your voice, and I'm sure everybody else would like to hear that question come through the phones. So same phone number all the time for everything. Text us, call us. you guys can get us at that same phone number. So let's take a quick break, Mikey, and then we're going to come right back.
And we are back.
All right. Well, thank you for letting me know that, because again, when we're on the PowerPoint, I can't see the normal controls that I usually do. So I don't even know what commercials that you're running. We have no snow commercials this week, right?
No, we do not.
No. Okay. We'll make some nice good ones for next week too. Some new freshies. Anyway. All right. So back to credit. I think it's so important. Again, if you're out there, you have questions you want to ask me, please feel free to do that. Put it into the feed, whatever you're thinking. I'm happy to answer it for you. So here we go. What factors influence your credit score? And this is very important. So inquiries. A lot of people don't know that. If you are out, I've got a really good buddy of mine who's buying a house right now. He's known for a while he was going to buy a house. And he decided to go out and buy jet skis, razors, a car. He bought a truck. Then he decided he needed a work van. We have got quite a few things that went down on his credit report, okay, over the last 2 years. We're looking at how many inquiries have you had in the last 24 months? The more inquiries that you have, the more it's going to drop your credit score. So keep that in mind. Keep that in mind. If you guys are thinking about financing something pretty soon, a car, a mortgage, you want to apply for credit cards, keep the inquiries low. Keep them low. Credit cards are great. Obviously, you've got to start somewhere. You've got to get a couple of them to start to establish and build that credit. If you don't have any at all, please open a couple of credit cards. But if you know, you're thinking, you know what, I think we're going to buy a house pretty soon. We're going to sell ours, buy another one. Just because you get the, miles, pre-approved letter in the mail, don't apply for it, okay? Just try to keep the credit inquiries as low as you can. Only do it when you have to do it, and only let them update it or pull it if they need to. So this is a big thing with cars, guys. Keep this in mind. You go shop for a car, you decide you're going to buy it. The dealership's going to pull it. So let's say you're at the Ford dealership. Ford dealership's going to pull it, okay? Then they're going to shop the rate for you. So they're going to send it to 4 or 5 more lenders. All 4 or 5 of those lenders are going to pull it too. So you now have 5, 6 credit inquiries on your credit report. Okay, the first credit inquiry for the same thing that you're doing, so buying a car, buying a home, looking for a credit card, the first credit inquiry that you do is what's going to drop the credit score. Then after that, within a 30-day period, if a car company pulls your credit report, it should not, and that's why I say should, it should not drop your credit score any further than that first inquiry. The credit bureaus know that you are shopping for a loan. However, I typically find when I'm reviewing credit reports, which is something that I have been doing for over 25 years now, I find that the more credit inquiries that you have, the lower that your credit score drops. So even though you did it all to buy that one car, but you ended up with 10 to 12 credit inquiries on your credit report, I find that you're going to have more points drop than somebody that did one with the dealership and maybe 1 or 2 with the lenders that they tried to shop with. So be very, very specific. That's something that they love to do. RV dealerships, same thing. If you're buying a boat, same thing. They're trying to shop to get you not only approved for the loan, because they're secured, but not really secured, right? I mean, they have to come repo that car and they got to find you first to get it. It's not like a home where you're financing against a property. You can't move that house, right? So it's a little bit more risky to do a loan against a car, a boat, an RV, things of that nature than it is a home. But a lot of times they're trying to shop and they're trying to get you approved. And so they send it off to a lot of places. Make sure that you sit down and you talk with them. Run my credit, and then pick the 2 that you think are going to approve me and send them there. If we don't like the interest rates, then we'll talk and we'll find out if we want to try some more. But make sure that you have that conversation and limit the amount of inquiries that you're going to let them do. That's very, very important, guys. Next thing is length of credit history. type of credit currently in use. Okay, so let's go to type of credit currently in use. Again, if you guys aren't watching me do this live, you're not seeing the PowerPoint that I'm working in. The best way to see the PowerPoint is to watch me do it live or to go to YouTube right now and actually watch the show through YouTube. And you can find it just by looking for Mortgage Mom Radio. All right, so here we go. Types of credit in use. So your credit score is going to change based on how much credit that you have. And that's credit cards, car loans, student loans, personal loans. The type of credit that you have in use will determine where your credit score goes. So if you have 3 or 4 credit cards open, that's very, very good. That's typically what we want to see. 3 credit cards, 4 credit cards. Very, very important to have at least 1 or 2 store cards. Get a Kohl's card, get a Sam's card, Sam's Club, get a, something like that. But you want to have a couple, 1 or 2 at most, store cards, okay? Don't go out, don't go open up the mall. Please do not do that. But you want to have 1 or 2 store cards. You want to have 2 or 3 major credit cards. And then you want to have, your car loans and your mortgage and all of that good stuff. The longer that you have these accounts open, the length of your credit history is also a factor in determining the credit score that you have. So that is very, very important. If you open a credit card and you're just building, you're brand new, you do a $500 secured credit card. And then you get an offer for a better credit card because now you've built credit and you have a credit score. That's fine. Take that offer with that $2,000 credit line or whatever it is that they're giving you. That's great. We want you to have like 3 major credit cards, but do not close the $500 credit line. That is your oldest credit card debt. That is your oldest credit line. Keep that line open. The older and longer that it is, the more that it matures, the better that your credit score will get. So whatever you do, pay it off, leave it at 0, don't owe anything on it, but don't close it, okay? Very, very important. Outstanding debt. Outstanding debt is going to be 30% of your credit score. So if you have 3 credit cards with $500 in limits on each one of them, that's $1,500, and you owe $1,500 on those credit cards, your credit score is going to go straight down to the floor, okay? You don't want to do that. You want your credit score to be at about 20% of your limit. You want your credit cards to be about 20% of the limits that they give you. So that's very, very important for you guys to keep that in mind. Some people will tell you 30%. Some people will tell you 40% or 50%. I'm going to tell you right now, doing this every day for 25 plus years, the lower that you owe, the better. 1% is going to give you a better credit score than 20%. Okay, guys? So try to keep the balances that you owe on those credit cards as low as possible to the actual amount that is open and available. Okay. Now, payment history, 35% of your credit score. So remember what I said at the beginning of the show. If you have an 850 perfect credit score and you end up with a $50 medical collection on your credit report, you're going to probably drop to the low 7s, high 6s overnight. 35% of your score is your payment history. So please do not miss payments. If you're not going to be able to make it and you know you aren't, get on the phone, call the toll-free number to your creditor and talk to them. Many, many times they will work with you. Many times they won't. I'm not going to say that they all will, but a lot of times they will. They will work with you. They will help you. Maybe you're going to end up with a negative, but they put you on a payment plan. And after you make X amount of payments, they're going to then correct the payment history. So get on the phone. Don't miss the payments. Don't sign up for a car loan or any kind of debt that you can't afford. And if you're going to, something drastic happens, you lose a job, something's going on, call. You never know. They may work with you. They may help you. You have to preserve your credit history. You have to preserve your payment history, and you have to preserve that credit score. That credit score is what is going to get you everything that you need in life. It really is very important. From buying a house to owning a car, all of those things that you need to obtain, student loans, personal loans, whatever it is you've got going on, credit is just an amazing thing that is typically going to be the factor of what's going to make or break that thing that you're trying to do. So keep that in mind. We got anything going on, Mikey?
Yes, we actually do have a question from Nicholas. His
Okay.
name is, or his question is, so is it better to get pre-approved with your credit union first?
So getting pre-approved, whether it's your credit union, your real estate agent refers you to a lender that they like to use. It's your bank, right? Because a credit union is a lot of times you're banking there, or maybe you bank with one of the big banks. Getting pre-approved before you go out and start looking at homes, yes, is the most important thing that you can possibly do. Do not waste your time. Do not get excited about a house and not know whether you can qualify for that loan. Don't waste your real estate agent's time in showing you something that you cannot get a loan for. Yes, 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 get pre-approved first. Now I'm going to say this, and I'm going to tap my own back. We want you guys to call Mortgage Mom Radio. We want you guys to let us and my team and me work with you to get you pre-approved. We would love that. That is what we're hoping for in our business model. Our business model, my business model that I created with Mortgage Mom Radio was, we're going to give the education, we're going to give the information, we're going to make it an easier transaction and an easier process for everybody that we possibly can, in hopes that they reach out to us asking us questions and allow us to help them and their family. So if you would like to get pre-approved, we'd love it if you call us instead of your credit union. But yes, no matter who it is that you decide is the best person to work with, give them a call, get pre-approved before you move forward. Don't just go out and start looking at houses before you've even done the paperwork. It's a waste of your time and the seller's time and the real estate agent's time. It's a waste of everybody's time. So that was a great question. I love it. Thank you, Nicholas. Thank you so much for watching too. And again, everybody out there, you guys, follow us, be part of the show, know when we're live, ask us your questions, interact. It's these questions that help everybody else listening. I'm sure somebody else was thinking the same question. Give us a thumbs up, please, on the video if you guys like it. It's going to help the algorithm. Subscribe to the channel, turn on the notification bell, and text us. Text the word MOM to 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. We good on questions right now, Mikey?
He wanted to know if it's the same for cars too.
So cars, yes, you can absolutely call car dealerships and you can ask for the finance manager. And when you talk with the finance manager, get them on the phone and say, I'm very interested in buying a car. I would love to come in today and pick one out off the lot. But here is my situation. And then explain to them where you're at. What credit score do you think you have? What is on your credit report? Do you have derogatory credit? Do you have perfect credit? Talk with that finance manager about what your scenario is. And they're not going to tell you yes or no, they can or can't help you, but they're going to tell you just the same as I would. You know, I'm pretty sure we can get you something. I'm pretty sure it sounds like we've got a loan that could help you. Why don't you go ahead and complete an application? Let us get you pre-approved and then come in and pick out the car that you want. So I've actually personally done that before in the past. So yes, the same thing with a car. I think that's a great option. Call call when they answer the phone, say you'd like to speak with finance, and they will put you through to talk to finance or a finance manager and have that conversation. There's absolutely no hurt in it. And if you get a finance manager that's not willing to help you unless you walk through the dealership doors, look for the next dealership, because it's not the dealership for you. They're not out for your best interest. They're not trying to make sure that they're helping you. So keep that in mind as well. How we doing? We got any more?
Grandpa wants to know if you do commercial loans.
I do not do commercial loans. We do residential only. So Mortgage Mom Radio, we are doing mortgage, 1 to 4 units, only residential. So anything that is 4 units or over, anything that is a building, if you're buying a warehouse, if you're buying a bar and grill, a restaurant, we do not do those. We only do residential properties, 1 to 4 units. Great question, Dad. I love it.
Heather wants to know, how often do you do credit report updates?
We update credit reports every 120 days. So if we do a pre-approval for you and you have not found a home yet, and we are at 120 days or 4 months, we are going to re-pull that credit report if you are looking for an updated pre-approval letter. Now keep this in mind, and this comes up a lot. If you had us pull your credit report and you've gone 90 days and you finally get into a home, that credit report has to have at least 30 days remaining on it at the time that we submit your loan for underwriting approval. So even though you're at 90 days, that credit report technically can go to 120. We are going to actually repull the credit report before we submit the loan into underwriting now that you are under contract and you are in escrow. Great question, Heather. And if you have another one, let me know. So let's take a very quick break. How many minutes are we at?
We are at 49 minutes.
Awesome. So we're going to take a quick break. We're going to flip the slide. Anybody else that has any questions, get those in right now so I can get those answered for you before we get to our 57-minute mark. And we'll be right back.
And we are back.
All right. So let's go ahead and flip that screen. Do we have any other questions that came in the meantime?
Grandpa says Carpies is for sale, and the guy asked me to make any kind of offer.
All right. Well, we'll talk after the show, Dad. I think that's a great one. Maybe we got to get Grandpa's land back. It sounds like a plan to me. All right. So if you guys are watching the screen, you're watching the YouTube, you can see the PowerPoint presentation. If you are not, you guys go to YouTube right now. You can check it out there. All of my shows are there. I've got over 60 live episodes at this point that we have done since the beginning of 2020. And you guys can see us do them, watch it there. And that way you can see the PowerPoint all about credit, right? Credit is important for everybody. So on the screen, it says revolving credit, credit utilization. Again, like I said earlier in the show, you really want to get to at least 20% or less in those credit cards to make sure that your credit score is as high as it can possibly get. The lower that the balance to the limit is, the higher you will see your credit score go. So good is 20 to 30%, better is 10 to 20%, and best is 7 to 10%. I like seeing you guys keep it from 1 to 2%. I know that that's not always possible, of course, but you do want to try to keep those limits high and those balances low. That is what is going to be a very big key driving factor to your credit score. Also, please keep in mind if you guys have a car loan, let's say, or a student loan or some sort of personal loan that you have been paying on for a long period of time, 3 years, 4 years, right? And you're thinking, I'm going to pay that car loan off and that's going to raise my credit score. Many times it doesn't raise a credit score, and many times we see that it will actually drop the credit score because you just took something that you have been paying on, a credit line that is long, established, and with a perfect credit history, and you paid it off and it went to the bottom of your credit report, and it is no longer holding the weight of the current debts that are reporting. So sometimes it does not benefit you to pay those loans off, and that is where you do want to get that phone consultation. You want to talk to us first. If we're paying off a car loan or some sort of a personal loan, for you to qualify for what you want to do, it may not make sense to pay it off first. It may make sense to run the credit report, do the loan, and specify in the application that we are going to pay that debt off before or at the close of escrow to qualify. That way we get the highest credit score we can. We don't jeopardize a credit score by paying it off, but we still get you qualified with the lower debt ratio of the payment being gone. So again, phone consultation, it's free, you guys. Get it. Get on the phone with my team. Very, very important. Any scenario that you're thinking about, talk to us first, and let us help you. How do you guys do that? Go to the website, go to mortgagemomradio.com, click the appointment button, book your appointment, do the contact us form, send me an email. Send me an email anyway if you just want to open it up on your phone right now. questions@mortgagemomradio.com. I am going to help you guys. I will get you scheduled. I'll get you set up with somebody that can help you. Remember that we've got appointments available literally Monday through Sunday. So if you're listening on Saturday or listening on Sunday, book it. And if you don't see a time that works for you, send me an email and I'll get you on the books with somebody. I will do my best to accommodate an early morning or a late evening call. We will do everything we possibly can. And remember that we're out of state, guys. We're in Washington. We're in Nevada, Arizona, Washington, California, Texas, Tennessee, Oregon, Georgia, Illinois. I know I'm missing some, but we're in many, many states. So I think we've got Colorado, we're working on Hawaii. We're around the corner with Hawaii. So if you're looking for something in a state and you're not sure, you have questions, just reach out. If we can't help you, we're going to let you know. We'll get you referred to somebody that we know in the industry who we trust and feel like they do the same kind of job that we do, and get you where you need to go if it's a state we can't help you in. So do we have any other questions? How we doing, Mikey?
Yeah, we do. Jeff Randall asked a question. He said, okay, I got one for you. Currently waiting until next year to buy a home. However, I'm going to need to replace my truck in the next year or so. Which should I get first in order to help my excellent credit?
Ooh, I like that. Okay, so let me make sure. I'm going to repeat what I heard because I can't read the screen today. He already has a car loan, but he needs to replace the truck and get a car loan, a brand new car loan. Is that?
So he wants to buy a home in the next year.
Right.
But he needs to replace his current truck.
Okay. So I'm going to then assume, and he can jump on and give us the actual answer, but I'm going to assume that his current truck is paid off, no loan against it, and he wants to buy a house within the next year, and he's wondering if he should get a new car loan. So one thing to keep in mind is if you don't have a payment today, and then you go out and you get a new payment, that payment is now going to be part of your debt ratios and how much can you qualify in that house. So if you're afraid that getting a new truck payment is going to lower the amount you can qualify for, and you might not be able to qualify for what you'd like to buy, I'm not going to tell you to hold off because a lot of times we need to get a car, but I'm going to tell you to get on the books and talk with me or talk with one of my loan officers. Let us run your debt ratios. Let us run your scenario. Tell us how much that truck payment might be if you go buy a new one. Let's talk about your income and let's run those numbers by hand quickly. And let's determine if that payment is going to change, whether or not you can qualify for what you're looking for. If it's not going to make a difference in how much that you will qualify for, or it will change how much, but if it's not going to change that you want 300 and we can get you to 300, then I would tell you if you're looking for a house in 12 months, go do the car now. Because the older that car loan is, the more months that have gone by and it's had time to season on that credit report, the more that the credit score is going to come up. So if you go and you get a car loan and then you turn around 2 months later and we pull your credit report again for a mortgage, your credit score will be lower than where the credit score would be if you do the car loan today and we pull the credit report in 12 months from now. So again, if you want to make sure you're going to qualify with the car loan, call us right now so that you know if you can for what you're looking for in a year. And if you're just thinking credit score wise, go do it right now. So you've got time to give that loan the time to mature and season on that credit report.
So two things. One, we are at 57 minutes.
Okay.
And two, he actually said that he has no truck loan. It's paid off.
Okay. So I answered that question, which is perfect. I'm going to end the show right now for this. You're not going to shut me off at the moment, Mikey. So for everybody listening on Saturday and Sunday over the weekend in all the different states that we are in, if you guys are enjoying the show and you want to keep hearing more about credit, then go to the YouTube channel because I'm going to keep going. We're going to do Mortgage Mom After Dark, and we're going to keep going with the topic until we're finished with the presentation. If you guys are watching right now, don't go anywhere. And for all of you on radio listening, we hope you guys have a fantastic weekend. You want to get on the books, you want somebody to give you a call the number. It's 844 We Lend for You. LEND and the number 4, book your appointment. Go to the website, mortgagemomradio.com, book your appointment, or send me an email to questions@mortgagemomradio. We'll get you all hooked up. We hope you guys have a fantastic weekend, and we'll see you next week. All right, so now we're going to move into, we're going to keep going. We're not going to hang up yet because I know that this is important stuff and I want to make sure I finish the topic, and I don't want to go anywhere. And if you guys are watching and you want to keep asking questions, please do. I don't have to finish right now. I just had to finish for the sound that is going to go from studio to radio, and you guys are getting to watch me do it live. This is exactly how I do it. So I already answered the question for you, and I hope that it made sense. And if it didn't or you didn't hear it, please put another question in the feed. Mikey's going to read it to me, and I'll make sure I take care of you. Are we good? Do we have any other questions right this second?
Nope, that's all.
Okay, so let's go ahead and flip the screen. All right, so your credit history, your payment history, and your length of history. So I actually already talked about all of these items in the last page that we were on. the PowerPoint, so I'm not going to read all of these things out loud to you. But your payment history is very important. Keep in mind, if you guys do a bankruptcy, we're going to see that. That's going to be reported on the credit report. Like I said earlier in the show, having a short credit history is going to make it a little bit more difficult to get that credit score up high. So the longer that the credit history is, always having payments on time. If you miss a payment, do it only as needed. If you have a foreclosure, that's going to show up. So your credit history is going to make a humongous difference to what that credit score is. And that credit score is the golden ticket to all of the different financing options and different financing things that you need in life to move yourself forward as an investor and, creating wealth down the road. Trust me, you don't want to pay cash for everything. You want to keep cash, and you want to finance what you need, and you want to do it smart. You want to get the lowest interest rates you can possibly get. And the higher that the credit score is, the better that the interest rate will be on the debt that you want to borrow. And the better that the payment will be, the lower that it will be. So if it's an investment, it's going to be the bigger the return will be. If you buy a house and you get a lower rate and the payment is lower and you put a renter in it, the return is bigger than if you take a higher interest rate because your credit score was lower. So keep that in mind. It makes a big difference. Just like I said, you can get an FHA loan at a 580 credit score, but you're going to get a much higher interest rate. So your monthly bill is going to be higher for the home you live in than what it could be if your credit score was better. So again, then you're paying more money, you're spending more money, you have less money available each month for cash flow. All the way around, your credit is key, and it's very, very important. I hope that this was a great PowerPoint. I hope you guys learned something good. I hope it was helpful. If you have questions, please don't hesitate to reach out. You guys want to be part of the show. You want to be interactive. You want to ask your questions. You've got to text us so that you get the link once a week. And please remember, again, if you click on the link and we're not there, just give it 2 or 3 minutes and try again. It's just a matter of YouTube getting connected to all of the different pieces of the puzzle to go live out to you guys. So text the word MOM to 844-935-3634. That's 844 we lend for you. That's WELEND and the number 4. So let's turn the page. I'm just going to remind you guys how to contact us. Oh, okay. This is taking action. I don't think we really need to go through this. This is what you know what? We do need to go through this. This is important. This is the kind of stuff that can be removed from a credit repair company. And we will get you off to the right person for that. No, Mortgage Mom Radio does not do credit repair, but we will get you off to a company that we have used in the past, that we have seen really good results from. We'll make sure that we're handing you off in the right place. So what are some of the things that can be removed if you have less than perfect credit? We have seen late payments, collections, charge-offs, inquiries, foreclosures, repossessions, evictions, judgments, bankruptcies, identity theft, liens, and incorrect personal information. We've seen all of those things be removed or corrected by using credit repair. You do need to make sure you end up with the right credit repair company, and we are going to hand you off to a company we have used, who we trust. If you are interested, all you have to do is reach out and talk to us. So just go to questions at Mortgage Mom Radio, reach out to me, say, hey, I know I need some repair, and I'll get you introduced to the right person. So, all right, so now we can switch. Let's go get us our contact information for you guys, and then the show is over. So once again, how do you guys contact us? You text the word MOM or you call. It's 844-935-3634. That's 844 we lend for you. That's WELEND and the number 4. Facebook, if you guys like Facebook instead of YouTube, that's great. Follow us, watch us there. If you guys like YouTube, we love it. Please subscribe to the channel. It helps us so much. Please give us a thumbs up if you guys like the show. If this was informational and educational for you, that's all I'm trying to do. I'm trying to get you guys what you need. Google, Yelp, if you guys love the information, you love it, comment, please give us a review. We would love that too. Very, very helpful for us to just spread our name and spread our word. Or go to mortgagemomradio.com. You can do everything that you need there. So I hope that you guys all have a fantastic rest of your week, and I'll be back. I'll be back next week. So we'll see you all then.